might be in and out. My wife barely slept, so I'm on a baby duty, 2 kids duty. So let's see if we can get in. Let's see. All right. So the purpose of today, I just wanted to kind of clarify some things, and also at the same time, if there's new people that are here, help them explain what we do. A lot of you guys express some not concerns, but like confusion on what you should do when you're, trading orbs. We have this, we have that. So when you think about trading, right, you can't take one piece of knowledge but ignore the other. Same way with the levels, same way with the principles, but you have to define your own trading strategy and how you're going to execute the trades. So everything that I've been giving you guys, it's more so that you guys figure out your own trading style and trade it rather than me telling you, hey, do this. If this happens, do that. A lot of successful traders take the information and education from others and they compile their own kind of trading style. So the first one, the easiest one that I've told you guys that can be money making anytime you guys trade it is orbs. So if I just kind of look at the orbs on here on Amazon on 5 minutes, or you could switch to 3 minutes, which is what we use, or at least I use. There's a couple of ways you guys can trade at this, last time. So here, we got the orbs out. They're already out here at this bar right here, I guess the beginning. So for me personally, I like taking double bottoms off of orb lows. So for me, this could have been a nice entry here, especially with this little candle, hammer candle that printed. That would have been one entry. Another entry is to look for confluence points, whether it's a trend line break or whether it's a VWAP or the orb or a trend bar actually here. So if I look at this, for instance, just to, this is kind of retrospective, right? But if you look at this, you would see this also live as well. So you have a trend line from the top to bottom. You reclaim the orb low. Here you're breaking VWAP, trend bar in the orb 50, and the trend line, top trend line here off of 3 minutes. So would you guys agree that this is to me, this is a fairly easy trade here, considering that we have 3-4 confluence points that are going in our way, and taking this trade long is a no-brainer. Good so far on the first entry?
Yep.
Then after we have that, and I kept telling you guys all day that Amazon looks and feels weird, that it's probably going to run. There was another bull flag that it had here, a bull pennant. Then it becomes, recognizing the patterns, and the only way you get better at this game is if you spend screen time. So here it looked like a descending triangle, but it's we had a run. So intraday bull flag here, and it broke. And then let's say if you were not trusting these levels, simple rule we said, grab the highs and lows of this and take your money at 618. If you did that, you would have made money here. On this trade alone, made $400 on a small account. So it's doable. You just got to be patient and wait for your setups. And here you have the orb high break, right? The trend line VWAP is all below you. So you're playing the break of this triangle here. And that's all you're playing. Okay. Then, you see that we had, I would almost call this like a double distribution day. If you look at it, we had consolidation on the bottom here. I'll probably grab only up here. So you had this, then it ran, then they had another consolidation like right here. And then it kind of broke out of it the last minute. And if you guys look through the chat, I kept telling you guys 28.42 is the level. Once the breaks, it's going to run. We also had the OEI script, which I'm going to bring into this conversation today as well. The highest puts in the money were 28.70s. So that meant that they really need to close it above 28.70 in order not to be on the hook for all the premium bets in the money for the puts. So you had some confirmations on the upside more so than the downside, and we had this level we were watching for 28.42 for the break, which was about $30 jump in the last. I think they did it like 24 minutes. Yeah, 24 minutes. they did about $35 jump. So far, just orbs. What I'm covering, we had the entries. You can enter an orb low double bottoms if you see the markets corresponding with you. Here you had confluence of 3 items. I definitely suggest you use trend bars. I'm sorry, trend lines here on the top. So you had like a little channel here if you look at it, right? That's been happening. So here was another one. This was your first, second, third touch. Some traders play the trend line on the channels, and they buy on the bottom and ride all the way to the top, and they get out here. But you see that we have our style of the orbs. Retest the orb low, hammer candle, take it above on the close of the hammer candle. Go higher if you're more risk averse. VWAP, trend bar, trend line, and orb 50. That's 4 confluence points right here. 1, 2, 3, 4 confluence points that were telling you to go ahead and take the trade. And even if you, let's say you're like, yeah, I don't want to take it at orb high, then just practice the orbs. Here's your opening range high balance, right? So I'm just taking this swing here, from here to here, and look what happens. Where's my first target? 127 to 28.41, right? And it's pretty much on the dot where it rejected 28.41. So you just have to be patient and disciplined and trust yourself and trust your setups. So the first one so far, orbs, you look for confluence points. If you see something is rejecting multiple times at orb high, and let's say, VWAP is the closest thing like here, the only way you would take this short is if it breaks the VWAP and the orb 50. Once it does, then you can go ride it down. And you see here, obviously, that it kept the VWAP. Once he kind of took over this candle here, this could have been your entry as well, 28.16. This huge indecision candle, hopefully you guys can see it. If I switch it to regular candles here, you'll see. So here, if you look at this, it looked like a nice candle on the regulars, on the indecisions. That's why I tell you guys to actually use it. Use the Hashi candles, and look at this entry here. If you would have gotten it here, the contracts for 28.60s were 35 cents at this point. So you probably would have made $4 grand on this move here. And that's all requiring patience, nothing else but patience and knowing your levels. You have to take risks. If you're not going to take risks, then, it's hard to make money. So here, if you take this is your stop loss. So in terms of risk reward, right, where's the little thingy? So in terms of risk and the reward, so look at this. And it'd probably be 0, to be honest with you. Even if you took this from here to here, and you extend this target to up here, this is a 4-to-1 trade, guys. So if you're not willing to make money, you have to learn how to. You got to risk it. You got to risk it for the biscuit. So here, we were risking. Let's say it was about $40-50 contract that I grabbed. I grabbed 50 of these contracts on the run, and I was able to scale out. Sold some at 4, sold some at 8, and I just kept scaling them out till at the end I sold a couple of them at $2,400. And believe it or not, I was playing COD when this happened, and I caught it. Okay, so orbs, always look, if you're going to trade orbs and you want to grow money with orbs, I'm telling you, I've done it before. Many people have done it. There's people in this group that, I've taught how to trade this. Slabby, who came from a different group, he was more of a swing trader. He became a day trader, and that's all he does. Jeffro, him as well. And there's a couple of other people that I basically taught how to use orbs and make money off of them. But it's all about patience and recognizing patterns and helping you understand the price action, right? So the second piece of this is, is any questions on orbs from anyone? Anyone? Okay. So if there's no questions, I'll just keep going. Then the price action, right? This is our beginning of the day. The blue line is the beginning of the day. So if you look at our, the rule book of the typical days and whatnot, you will notice that this was your initial balance high, right? Or orb high is right here. So if you look at this, and this is your initial balance low, we'll just mark them here. We can see a couple of entries here, right? So we know, honestly, here, there's no way for us to know to get in here, right? You have this little candle, you could have taken it above it, but here you had the previous low that, that was respected twice. It looked like a double bottom. Some price action traders would take this reclaim of the previous orb low and take it long. And considering that we have the initial balance high here, this would be your first target. Okay, well, let's say you didn't take this trade at all. Let's say you're like, man, I'm so terrified of the stock market. I don't want to take this trade here or even this candle. I don't want to take this. Well, there's one that's super easy, right? So you have this huge run here. Then this is the best trade, the best probable setups for you guys, especially the newer guys, that you can make money on. It's right here. It will work and it will continue working. And if you look, I did tell you guys that this is about to happen, and I think few people caught it with me. And look how beautiful this was. You got in on the break right here, and you put your stop loss right here. I mean, you have to risk money to make money. Here's your stop loss. You got in, stop loss is here, 28.06 is your stop loss, and this ran all the way to 28.40. So you would have gotten in at 28.15, so 25 points for a stop loss for a $9 risk. Just think, like, why not? I'm risking $9 to make 25. Like, to me, in my mind, that there's just no logic. Like, I'm in. I will always be in when that happens. Stop being so picky, dude. I indicate my trend lines, whether they're up or down with the red or white colors. And I use my white lines for levels only, but here, hopefully that's better. So my red lines are bottom lines, my green lines are top lines, and then my white lines are levels. So here's a bull flag. This was your entry right here. This was a simple entry of price action. Take it. This was your entry. You go ahead and take that bad boy. Okay. Then you had the levels. Even if I do this on this particular case, you will see that it works. It hits your fib 1618, 127. You can scale out if you got multiple contracts. Then you have something that we should all recognize. It's called consolidation, right? So, and you see in this time, they're killing your premiums. If you did not sell here, your premium is gone. Yes? Yeah, let me see. One second, guys. Yeah, he's okay. Thank you. Here. Sorry, guys. So here's your consolidation, right? This is Friday. This is your killer. Where is this? Is this mine? Yeah. This is your premium killer for Fridays. This is what market makers live for. And then I'm not going to go into it, but it's called the market makers pattern. This is where they make money. Market makers pattern makes them money, is where they drop it below. And we knew, I don't have the script ready here. 2870 puts, if you go and look, 2870 puts had the highest put premium, meaning they're in the money for the market makers. They needed to close it above it in order to make money. And what did they do? Well, they do what we expect them to do. So it's just putting these things in motion. 2842. Let's say you got in here, you waited, 2842 was pretty much the day high, and you wait. You can either go off of this candle or this multiple auction fails here. And if you got in here, that's simple. You got in, and this is simply price action. I don't have a single, besides volume, I don't have a single indicator here. Okay, and you can do this pretty much on any stock you like. Give me a stock, anyone, and we'll kind of review it and see. Sure, let's do in the video. I'll just remove everything I have. I'll go in 3 minutes. I just want to mark my lines for verticals just so I know the date. Yep. Okay, but thank you. Okay, so here's the beginning of the day on Friday. So this is your initial balance high. We'll just put the magnet so we don't. So this is your initial balance high. Let's see. So there's a couple of ways to trade this, right? So if you look at this right here, in one of the training classes, I've shown you guys that usually if you're gonna have a run up or down, you're gonna have a consolidation. You're gonna have a consolidation on the bottom or on the top. And this open was pretty decent size open if you think about it, right? So this open was 22 to 212. So the chances of this breaking up and continuing running is pretty slim. But in case it does break, there's a strong chance that we're going to continue. So here it looks like a double distribution date. So if you look at it, right, we've talked about this before, where if you have something like this, right, and me personally, it would have been like probably here or even here. These couple of 2 failed auctions. This would have been my range. Yeah, I don't use option to price my risk to reward. I use the underlying asset to determine where's the next level it can go to. I don't care if about the option. Option is going to move when the stock starts moving. So that comment, yeah, I don't understand because it doesn't make sense. You determine risk and reward based on your entries and exits. Okay. So here's your consolidation here on the bottom, right? If you look at the 3 minutes, here's your consolidation. Then it has this massive, like if you want to call it triangle or a bull flag. I don't like to define these huge ones as bull flags, but here you see like almost like a descending triangle, right? It's almost like the flat bottoms and lower highs, right? So you have a higher high, lower high, lower high, lower high, and then here it's keeping kind of flat. Yeah, 1, 2, 3 touches. And honestly, let's go back. So if, me personally, I would take these couple of wicks. Other people that are like super risk averse, they would do this, right? They have this wick here and they're like, man, we're not letting go of that wick. And it's all your preference. I can't tell you what to do, right? You have to recognize consolidations on your own and see what's going on. If I was to switch this to 5 minutes, it'd probably be a lot easier. So here's your 5 minutes. And here now you're looking at, you have this one here that's kind of double failed auction, but let's say go off of this one here. So here's your 5 minute view and look at this. So you have the consolidation and the retest and the break. So our first entry in the last class was whenever you have this, you're going to have a re-entry on this, you can take a long. Well, if you take a long off a price action, let's see, you hit the 127 on the dot, well then your best entry will be the retest of this demand, and usually guys it will happen. This will happen usually 80% of the time. They come back and retest this initial demand. Well, here they retested it perfectly, and look where we closed. You guys see that? It closed right on the money where we expected it to close. So you just have to know that this also looked like, there's going to be a double distribution day, and it's similar to what they did with, with Amazon. A lot of tech had the similar setups, but here it was more of it was more trickier to understand it unless you knew that there's a little demand being created here in 5 minutes. You have a demand being created, it touched to here. The best thing you can take, honestly, is when this happens, you put your stop loss here, first tap right here, get in, breaks this, get out. Yeah, maybe you lost $20, but what if you cut this run here? You're going to be risking a little bit. Let's say you risk this much, and I'm just going to say that, let's say you believe it was going to go to 127 to the previous, today's high. That is 11 risk to reward ratio. I mean, in my mind, like I just take these trades. I gotta take these trades. Like there's no other way than not to take these trades. Does this make sense? Anyone?
Makes total sense.
Okay. So, and these are the simple setups that you can use. And even if you know, let's say you're super, like you're a crazy risk averse and you can use 10 minutes for day trading, guys. It literally works. And you would probably be less faked out than anyone else. So here's 10 minutes. Let's say you're like, yeah, this is the consolidation. This is the zone. If you're not comfortable with 3, 5, use 10 minutes. Nobody's going to tell you what time frame you need to use. It's whatever your preference and style is. Here's your demand zone. Here's your retest. Here's a go ahead. Here's your initial balance high, opening range high. If you didn't trust that, I like buying at demand. If you're the breakout guy and you like to buy here, then you bought it at 222. This would have been a nice pay as well, considering that today's high is right here. It should be your kind of profit taking level. And I think both trades would have been good, but this one just carries a little bit more reward because you're buying it right at the demand. Okay. Then the last piece, not last piece, but so far we covered orbs, and you can use orbs by themselves. You can use it in correlation with price actions and patterns, whether it's trend lines, what we talked about here, right? If you're connecting this and it's breaking, let's say here was your entry, first entries right here, just naked trading, sure, you can do that. But the key piece, and there people are like, well, we have these VPOCs, we have these clouds, we have this, with that. Well, the reason why we have that is, let's say that let's say the cloud was right here. Cloud was right here. And you're like, man, if this breaks right here, I'm gonna go along, and the daily cloud is closed at 241. Wouldn't you want to know the daily cloud's closed and it's gonna reject there? That's why we added the clouds, is to give you another perspective, so that way you know what's being hidden. Till you had the clouds, you had no idea where stuff is going to reject. I promised you. Many of you probably like, yeah, man, I knew. Go retest it and you'll see that you had no idea where stuff was coming from. I think this is the daily. I think I watched the video, reject it perfectly. Let me see. Oh, yep, there it goes. Yep. Well, like this one right here. If I looked at these levels, right, and a lot of people trading, a lot of people trading, structure-wise, it's higher high, lower high, lower high. Nice entry right here. You take a long, making higher highs. Next entry would be, next target would be here. So if you're just going off of price action and you didn't have the clouds, your next level would probably be 248 here. You guys agree or disagree? I'm just showing you a picture here. What else do you see that tells you it's going to reject here? You have a confluence here. You have not this. You have this zone here, right? And it's going inside the zone with the big green candle. Usually that's a sign that it's going to be a failed supply zone. But then look at the daily. That's why we have the clouds. It doesn't hurt to do this. And this is how I use it. I would mark this and I would just put, hey, this is my daily bottom. Just be aware of it. If there's a pattern or some kind of triangle at this point, just be aware. Like even here, like I'm on 10 minutes, remember that. If you took this trade right here, I'm trying to zoom in so you guys can see it. Even if you took this trade, let's see when this happened at 2 o'clock, so we're good on timing. It looked like a descending wedge, or if you want to call it like a mini bull flag from the bottom of here to here. And you didn't know the daily bottom is here. How do you determine your entry? How do you determine your exits? That's why we have, well, you can use the fibs, definitely. Here, let's use the fibs. So if you use this for the day, 241.85, 238.89. Fibs are good, but that's why, knowing that there's something right in between these would have helped you and basically make money, because look at the dump right afterwards. Yep. And if you look, that it rejected right here. And it's based off the levels. And that's why we added the clouds for you guys, so you can see these things. If you didn't know this, and you can find multiple cases where the clouds worked and where it rejected, where it did bullish money shots, like in this case. So here's an example of almost beautiful bullish money shot. You reject twice, then you got in, and what do? You go from here to here. And I'm telling you guys, whenever there's a bullish money shot that occurs on that cloud, there's a chance, 90% chance it goes to this middle line here. But this doesn't mean, hey, oh my God, do I trade this or do I trade that? No, you just look at it, right? If you pre-market, what I do is I'll look at it and I'll say, oh, if there's a bounce or if there's Apple coming at 163.09, it's setting up for a bullish money shot. Then I'd be like, okay, 163. We also have another piece of information, right? What did we have pre-market? Does there anyone remember what I posted to you guys on Apple? Anyone? No? Was there any OEI levels on Apple that were important going into the week?
Alchemist said it in chat. OEI levels.
Like this one? In the money premium for Apple for 170 puts was $25 million. All the below puts right here, they add up to be about 20 million as well. Their goal, based on this picture alone, for me was they want to close this above 170. Sure, they'll lose the 2.1 million or whatever that might be, fluctuating during the day, but look at the puts that they're collecting. So when I saw this and I saw this pre-market, I was able to kind of be like a computer and combine the data and be like, okay, well, they're most likely going to fake people out. Then they're going to tell them we're going down. They're going to bounce it here, bullish money shot. While my daily middle lines up to be above 170, which is a key pain point for the market makers. So why wouldn't they call it? Why wouldn't they close it above it? Everything for me as a storytelling for myself. When I want to get a trade, I'm looking at a story. What all do I have? I have bullish money shot. I have the daily mid. I have the OEI there. And then if I add, let's say, now I add the orbs. Sure, I'll add the orbs. And look at this. Well, even if you didn't, let's say you didn't take this trade, you had the orb 50, which was perfect entry here. It broke it, came back for a retest, held the VWAP, you take it here, you drive it to orb high, and you get out. Then the same concept as before, major levels get retested. So if I look at this level here, thank you for the shortcut on magnet. Whoever told me control, that's pretty cool. So here is your orb high, and here's your retest. You broke it, came back for a retest, nice hammer candle, had the VWAP. If you don't trust the 2, wait for the trend bar, take a 3, let this be your exit. You have a level. And to me, it's just simple, and maybe I'm oversimplifying it, but that's how my mind works and how I trade. Yeah.
Shorty, I don't want to make this a cloud class, but I have a quick question if you don't mind.
Yep.
When plotting your chart in the morning, and then you start looking at intraday, is there certain clouds that change their levels during the day, or is there
4
some
hours
that stay?
is the only one. 4 hours is the only cloud that changes because it recalculates every 4 hours.
Thank you, sir.
Yep. So if you look at 4 hours here, and what do you know here? Your 4 hour middle was lined up with the orb 50. So for you, that's another confluence point that you can utilize from all the stuff that you know or you use, right? So you have the 50% orb, you have the 4 hour mid, and then you know that your targets are up there on a daily middle, which was 170.42. So that's how I'm using clouds. I'm not using them solely to take the trades. I just mark the levels. I'd like to know the levels where they're going to reject. You don't have to turn them on. After you mark the levels in the morning, after about 9 o'clock, you don't have to turn them on again. Don't clutter your charts. What I do is I'll just put a line and I know where the cloud is. I don't have to worry about it again. Okay. Then the last piece, they're like, man, we have so much shit. Well, you don't. You really don't. Compared to what some other people do, this is just giving you strategies that you could use solely just the clouds. You could have taken the bullish money shot on the daily, on the bottom, and drove it all the way up to the middle. Sure. If you want to use the orbs, then use the orbs in accordance in plus the cloud levels, so you know where stuff's going to reject or bounce or whatnot. This is not use all of them together. No, just know what is going on. Be aware of all the stuff that you see, and then make a decision. Right? You got to process the information to make a decision that's going to be high probability for you versus them, and that's all you're doing. So if I close the clouds, the VSPs, honestly, the VPOCs are probably the deadliest thing of all of these things right here. If you don't use the clouds, just use the VPOCs, because they will guide you where you should take profits, where you shouldn't take profits. So if I close this right here, me personally, there's a VPOC right here, right? If I was trading Apple, so there's a VPOC right here at 169.06. Well, for me, there's also a VPOC right here. God, I hate the color scheme I have. There was a VPOC here, came back for retest, so that level kind of carries some importance, right? And you see here, they came back, retested it. In between, right here, between these levels, you have this level here, which is 163.68, which is, I believe, where it bounced. It was, yeah, I mean, it never closed below it, so it bounced there. Then you have a VPOC right here, and then you just keep going and keep marking them, right? So there's not a VPOC, there's not a VPOC, but I would still definitely mark the POC, so that way you know what's the next levels. So here's your 173, which matches with some of the stuff here. Having these levels, have the POCs enabled, and then look from which POC a major action happened, right? So if I was personally looking at it, what's the deadliest POC right here that you see? Where's the major reaction to a POC? Use the dates on the bottom to identify it. Yeah, the 169 is the most important one, because look what happened. Once it broke this one, they literally did not care. They just dumped it all the way down to, what is this? 156.04. So this level is going to be an important level, because it seems like that there is a seller here that he's willing to unload his inventory of Apple stock. So here they broke it. So what can you expect, let's say, on tomorrow to happen? This level is going to be tested. This level is going to be for sure tested tomorrow. And if you just draw a simple demand zone here, I promise you this level is going to be tested tomorrow. They're going to go over it and they're going to come back. And if you're patient enough and you wait, you get your reward. And then you have the targets. Let's say you get in here. If it gets a retest here, it's probably going to go to this VPOC right here. Well, not VPOC, to the next POC. So you have one here that's hiding. I guess that's where we kind of got stopped. So break here, you have a target. First one right here, second one here, third one here. And if any of these targets match up to, let's say you're using orbs and it matches up perfectly like this one, there's probably a strong chance that it's going to reject, that you should take your money here. And that's why we use multiple ideas to find the levels. You don't have to use clouds. If you don't want to use clouds, then use VPOCs. Use what you're comfortable with. I'm giving you the ammo. You're the guy that's going to make the shots. You pick the ammo and a combo of ammo that you want to use. I gave you VPOCs. I gave you orbs. I gave you OEI. I gave you the clouds. We have the orb, like obviously the orbs with the VWAP and the trend bar inside of it. If the orbs by itself are the thing that you want to use, then just use the orbs by itself. You really don't need anything else. I'm giving you guys options because not everybody in this group learns the same way. None of us learn the same way, or none of us can process the information the same way. So that's the reason why I'm telling you guys all of the information that I have in my head and how I use it, and how we can be prepared for, for the market itself. Aaron, VPOC versus POC. So yeah, we covered it a couple of times. VPOC has not been retested. So if you look at VPOCs, let me just turn them on here. So if you look at the VPOCs right here, let me see, let me find Qs. They will have some VPOCs above. Okay, so here you go. So here's Qs on 30 minutes, and you guys see that it's a beautiful down channel here. It's trying to break it. It has a POC here at January 21st that it rejected nicely. Then it has a VPOC here at 372, and you see that this level has never been retested since it's been broken down. So from this point, it never came back to retest it. That's why it's a virgin POC. Okay, does that make sense? And this is actually a good setup potentially for tomorrow, that we can watch the break here of this POC here. We have one middle POC at 353. If that breaks tomorrow, there's a high chance we're going to go to this POC right there, 356. So it's not a bad $3.60 move on Qs. And then if it breaks this, let's say we gap up, what do? Probably going to do this. I guarantee you, it's going to do this. And then it's going to scare people, come back somewhere around here into the demand zone, and then do this. I'll just leave these lines for time being. Does everybody understand, or is there any questions on why I give you the information I give you? I'm not giving you information to clutter your mind or to clutter your trading, but it's rather giving you information that you have the ammo to make your own to make your own trading style. Because if I gave you one piece and it doesn't work for you, well, it doesn't fit your personality, then it's on me that you're not, succeeding in trading because you don't have much knowledge of trading. Does that make sense?
Everything's good.
Oh yeah, so volume anomaly. So here's your volume anomaly. So if you look at 30 minutes right here, so here was your break on SPX here. We're still in a bear flag mode on SPX here. It's a bear pennant. So if you look at a couple of candles here, if you look at these candles on the bottom, where did it go? If you look at this and you look at your price action, yeah. Okay. So what do you see here, right? So Shinobi, I don't know if you're on voice or not, but so here what you're seeing is that price is taking off, right? And the volume is not supporting that. When something is running and going up, when it's going up, that means it needs the volume to be, going higher with it in order to support it. Adi, can you go give him a pacifier? Here, the volume is decreasing as the price is going up. That's called an anomaly. And here, you have what I sometimes look at is the relative size of the candles. So right here, if you look at this candle here at, at 330, so big volume, big candle. Here you look at it as well, same big volume, big candle, all occurring at the end of the day, right? So for me, sure, I pay attention to volume, but I don't buy a lot of 5-minute candles and say, man, this is a volume anomaly. Here it occurred at 10 o'clock. That's a volume anomaly, right? So here, if you look at it, this is an agreement, right? If you look at this trend right here, and you look at this trend right here, yeah, the price stepping up, the volume is agreeing, and then poof, a rejection is coming. But this you can use on different time frames, right? Not necessarily has to happen on 30 minutes. You can use it on any time frame that you see. And as you get, more familiar with the charts and you spend more time with the charts, you'll be able to notice these a lot quicker. You'll be able to know, like for instance here, that it has a little T-Mobile signal sign. That's what I call it, 1, 2, 3, and then you can expect a blowout here off the top. If you're trading this, let's say right here, 4388, well, volume is coming in and it's a green here at the end of the day and kind of exploded since. Okay. Any other questions on this? Hold on one second, guys. Hey guys, I'll have to call it a day here. I'll hop on watch list tonight for 9 p.m. I'll get on there and we'll cover anything else that we did not cover. The baby just woke up and I have another toddler here, so I'll have to hop off. But sorry about that. Hopefully you guys had a understanding of everything that we do in terms of just the strategies and why we use them. It's more so to give you guys the ammo rather than put it all on a chart and get confused and get paralysis from analysis. But let's talk tonight at 9 p.m. Let's put a couple of tickers together and then we'll go from there.
Thanks, Shorty.
All right, bye, guys.